Turkey turmoil, no end in sight. Investors prepare for President Erdogan's public address and a press conference from his son-in-law, the finance minister, as the bottom gives out in Turkish assets. Beware contagion from emerging markets to Europe. Investors flee EM assets and the ECB worries over Turkish exposure of European banks. And Evans, the hawk. Chicago Fed President Charlie Evans talking up restrictive monetary policy while markets await for the latest read on inflation. Happy Summer Friday. It's slow news day. Just kidding. Welcome to Bloomberg Daybreak on this Friday. I'm Alex Steele alongside Jason Kelly. David Weston is off today. We come in, there's like, 3 people probably trading. Everyone's out in the Hamptons, right. And there's some serious contagion worries and news from Turkey.
Huge news from Turkey. We are, as you said, awaiting President Erdogan. You know, this is a guy who talks all the time, and yet he's been silent for the past couple days, except for a very brief comment earlier. Eagerly awaiting what he says, not sure if anything he says is really going to make a meaningful difference at this point.
And usually what we talk about is how the Turkish issue is idiosyncratic. Now the conversation becomes, what is the contagion like? And you can see that reflected in the market board here, cross asset check. If you take a look at S&P futures, they're down by 11 points, but the U.S. seems to be faring better than Europe. European stocks are down over 1%. Euro dollar also an unbelievable mood, really getting taken out by the woodshed here, down 0.6%. A part of the worry is contagion. There are also some technical levels that are being spoken about, and the dollar potentially being a safe haven. And if you want a safe haven, you're buying U.S. bonds, and you're buying safe haven bonds like the core bonds over in Europe. The 2-10 spread continues to flatten 25 basis points as we wind up leading to that inflation number. And crude bizarrely turning around now, up 0.3%, kind of totally on its own tune, despite the risk-off feel.
Yeah, that's a fascascinating sort of turn of events.
Yeah, that doesn't make any sense to me, too. But like I said, the volume is probably extremely light. Right. So you have to also take these moves in that sort of mindset.
Absolutely. All right, so we need to dig into this. So for our first take, we're joined this morning by Mike McKee, Bloomberg's international economics and policy editor, as well as Brooke Sutherland, Bloomberg opinion columnist. Whew. So, guys, not at the Hamptons, Mike. None of us are out there.
He's going. He's going at 12:30, so, whatever.
I'm going in 5 minutes. This is going here.
But you said something really interesting that as we were coming on, which is, there are a lot of folks, honestly, on vacation, and they have to be waking up and thinking, wow, do I need to get back to work? I mean, this is a big deal.
Yeah, it's a big deal because, it's actually our friends at the Financial Times started this overnight because they reported that the ECB is concerned about European banks' exposure to Turkey in foreign currency loans, particularly BBVA, Unicredit, and BNP Paribas. And that raises the specter of, could this be another Greece?
Right.
And could it bring down the banking system? Could there be contagion? Most analysts that I've read this morning say probably not. The numbers are relatively manageable, but just the idea of it has everyone on edge again. And the problem is Turkey's financials are not good, except for their budget deficit isn't too bad, but they have a very large current account deficit. The economy is slowing and inflation is rocketing higher because they overstimulated for the election. So their choices are not very good. And President Erdogan has suggested he doesn't want any of them.
Right.
So people are looking at a wall and saying, we need a door.
Well, to that point, Bloomberg spoke to President Erdogan a few weeks ago, and he talked about the central bank relationship with the presidential office. Here's what he had to say.
Now, first of all, you're the head of the state. When the people fall into difficulties because of monetary policies, who are they going to hold accountable? They'll hold the president accountable. Since they'll ask the president about it, we have to give off the image of a president who's influential on monetary policies.
And that's the question in the market. With the lira at another record low, SocGen says you need 600 basis points worth of a hike to stem that tide.
And they laid out this economic plan, and a lot of it was nice to hear, but the proof is really going to be in the execution. And are they willing to make the types of changes that need to happen in order to stem this route? And we just heard him talking about his vision for the central bank being very much an extension of himself and following through on his vision of the economy. I know a lot of investors were really struck by the fact that the central bank refrained from raising rates at that first meeting right after the election. And I think the concern is, are they willing to do what's necessary here? Is he willing to veer from his own policies, his own beliefs, to really step in and stop this? And I think that's what we're waiting to hear today.
Well, and also let's remember that this is in part triggered by some sanctions levied by the U.S. over the continued imprisonment of a U.S. pastor. So this has a geopolitical tint to it as well.
Of course, and the reports today that the Turkey officials that met with the American officials did not get anywhere. There was no conclusion to those talks, no progress made on getting that American pastor back home. And so I think that's sort of adding to these fears of could there be additional sanctions that compound these domestic problems, compound the rout in the lira.
And of course, we're waiting for President Erdogan to speak. And a state-run TRT television says that according to some remarks there, Erdogan says we're not going to lose the economic warfare being waged against Turkey. So more aggressive rather than not. But Jason raised an interesting point. Like, what's idiosyncratic for Turkey and what is now becoming a sanctions U.S. geopolitical issue?
Well, it becomes a little bit of that, although the U.S. sanctions are a minor part of this in terms of their effect on Turkey, but a larger part of it in terms of the psychological effect on investors. We sanctioned 2 individuals in Turkey, no Turkish businesses or banks, not even the government, but 2 individuals as President Trump tries to pressure the Turks to let Pastor Brunson go. And so the threat maybe of additional sanctions is what's weighing on investors' minds. It's probably the least important factor here in terms of what it could do to the Turkish economy, but the most important factor over the last week or so in terms of investor psychology.
And that brings us to our second top story, which I already touched it a little bit, and that's contagion. And if you come inside the Bloomberg here, you can look at the Turkish lira, the white line, versus the MSCI EM currency index. Moving in tandem, they're now at 0.7 is that correlation on the bottom panel. Mike, how much of that is true contagion versus how much of that is thin trading?
It's probably a little bit of both. And what you're really seeing here is a reaction to the strengthening dollar. And of course, the dollar rocketing up today on the Turkish news as the Fed continues its policy of raising interest rates. And you get headlines. I don't think Charlie Evans is as hawkish necessarily as the headlines make him sound, but that just adds,
headline, man.
just adds to the pressure that others are feeling. And now with this news about Turkey and the idea of contagion in Europe, does that lead the ECB to pull back more? And then the interest rate differential stays wide. A lot of factors at play here, but it all kind of comes back to the fact that the U.S. is in a stronger position than other countries.
Well, and that is a really interesting point that Mike raises, Brooke, this whole idea of, the asynchronicity of this to some extent with the U.S. as well as the rest of the world. And break down, if you can, the difference between what the contagion looks like in Europe and what the contagion may look like for other emerging markets. What should we be more worried about?
Sure. Well, one thing I want to point out is that the dollar had just ripped yesterday, but it rose against not just emerging market currencies, but also other currencies more globally. I think what's striking to me is seeing this reaction in emerging markets. You hadn't really seen this in before. And some of these problems aren't necessarily new. We didn't just wake up today with a problem in Turkey. This has been happening, but it tends to be more of an idiosyncratic situation. The same thing with Russia, the same thing with Argentina and the bribery scandal there. And so I think the thinking was before that these would be more country-specific issues and other central banks had built up more credibility. Now I think that is being tested a bit more as these situations drag on.
Right. All right. So Mike gave us a preview of the third story related to Charles Evans, of course, the Chicago Fed president. Here's what he had to say. It would not surprise me at all if we make a judgment to move to a somewhat restrictive setting. You are the Fed guru, Mike. Restrictive setting. Charles Evans talking about restrictive.
You got to give me a little bit of hawk there.
Maybe a little bit of hawk, but not that different from what he's been saying. But he got a lot of focus on it because he had reporters in and he was talking directly to them. Look, the Fed is continuing its gradual, slow process. Sometime next year, they're going to get to neutral. They don't know exactly where neutral is. It's a kind of floating concept. So they get to 2.75%, which would be 4 moves this year, 3 moves next year. They're at about there, and it might be slightly restrictive. And then they're probably going to stop for a while. But it's not like we're raising interest rates to a level that's going to choke off the economy, 2.75%. If I told you your mortgage rate would be based on that 5 years ago, you would say, great, I'll take it. Yeah. Bring it on. So a lot of this, again, gets back to the word I used earlier of psychology, just the idea that rates are going up. And he says we might be a little bit restrictive, but he's definitely not outside the Fed box here.
All right, guys, thank you so much. Bloomberg's Mike McKee and Brooke Sutherland, thank you, and happy Friday to you. And a reminder, you can find all these charts at GTV Go on your terminal. Scroll through, you can check it out. All the charts we're going to use over the next couple hours, you can come in and save to your computer. All right, coming up, investors waiting for President Erdogan's public address as Turkey remains in turmoil. We'll discuss the fallout in the asset class and spread to emerging market. This is Bloomberg.
This is Bloomberg Daybreak. I'm Emma Chandra with your Bloomberg Business Flash. Europe's largest discount airline, Ryanair, is facing the biggest strike in its history today. Pilots in 5 countries are walking out in a bid to get better contracts from a company known for its penny pinching. That's led Ryanair to cancel at least 400 flights. The struggling British department store chain House of Fraser has been rescued. Billionaire Mike Ashley's Sports Direct scooped up the chain's UK stores, as well as the brand name and inventory, for $115 million. That came after House of Fraser went to court to seek protection from its creditors. And shares of Overstock.com are soaring in pre-market trading. The Hong Kong-based private equity firm GSR has agreed to invest up to $375 million in exchange for equity in the online retailer and its blockchain subsidiary. GSR will get to buy about 3 million shares of Overstock at a 5% discount to its closing price on August 1st. And that's your Bloomberg Business Flash. Jason.
Thank you so much, Emma. We are, of course, awaiting President Erdogan there in Turkey. You can see the empty podium there, awaiting people starting to mill around a bit. And we want to get a little bit more of what we're going to expect. Joining us now from London is Riyad Hamadi. He is Bloomberg's Mideast and Africa executive editor. Riyad, nice to see you. So a very busy morning, or getting toward afternoon, there where you are. What do we think he is going to say? What can he say to calm things down here?
Well, those are two very different things. What we think he's going to say, and he's given kind of a hint earlier where he said, that people are waging economic war against us, and we have our people, we have God. Which suggests that he's going to give a speech that is directed at his base. He's going to raise people and say, this is a conspiracy against us, and we have the strength to hold out, and we're going to hold out. What people are, or what markets at least, what investors are looking for him to say, look, we're going to espouse reasonable economic policies. We're going to ensure that the central bank is independent and that it sets interest rates in line with what central banks should do to control inflation, which is at 15%. Or maybe he'll announce some other measures that are aimed at dealing with this crisis. The issue is that as the crisis goes on, the measures, first of all, need to be much more radical. So already you're seeing forecasts coming out of as much as 500 basis point rate hikes, which wasn't the case a few weeks ago. And also, some people are talking about capital controls, which something that Turkey has always said they don't want to do. And others are talking about Turkey having to go to the IMF, which again, Turkey has seen as anathema and has had a history in which they don't really necessarily want to repeat.
Certainly a lot to look at, and as you say, Riyad, people really, and investors specifically, looking for specifics about what happens next. Bloomberg's Riyad Hamadi from London. Thank you so much.
All right, so what do you do if you're a market participant? Bloomberg asked many strategists throughout the morning.
It's no longer really about policy, it's about credibility. I mean, the Central Bank of Turkey has almost no credibility at the moment, and I think there probably needs to be personnel changes.
Turkey has 3 possible courses of action, and none of them are very tasteful.
As far as Turkey goes, I think we've been uncomfortable with the policy mix for a while.
It's disconcerting what we've seen, the steps from the Turkish government and Erdogan's politicalization of the central banking system and his appointment of his son-in-law as the head of economics. So, I think that for investors, we want to be very cautious on Turkey. This is not the time to be considering Turkey.
Alex Dryden, JP Morgan Asset Management and Global Market Strategist, here to weigh in on his opinion. So, Turkey assets, not time?
I think it's a little bit early. I'm going to join the consensus there of a pretty bearish overview of what's happening in Turkish assets. What it comes down to is the political situation within Turkey is deteriorating rapidly and changing quite dramatically from where it was a few years ago, which was quite a progressive Islamic democracy. Now you're starting to see that bumping in to Turkish economics and financial assets. I don't want to catch a falling knife here. This is something that I'm going to leave alone for a while until we start seeing some stability coming in.
Well, fair. And we heard that last week alone, foreign investors sold like $18 billion worth of bonds, but they were buying equities. What kind of rotation can we expect to continue?
I think what you'll start seeing is that much more risk-off move. I think what you'll see is a sort of sucking out of all foreign-denominated assets that are within Turkey and people pulling back. That's a problem for a country that's running a big current account deficit and a big budget deficit. It is reliant on foreign funding, particularly from the European financial system, to stay up. My concern is if this dollar strength persists for even a short period of time, coupled with the geopolitical situation that we're seeing within Turkey, things are going to get a lot worse before they get better.
They're going to get worse, it feels like, and that nasty word, the C word, contagion, we weren't really hearing about that a lot until really just the past 24 hours. It feels like. How does that play out in your estimation?
Well, this has put that onto the table, the comments from the ECB that they're concerned about European banking exposure to the Turkish financial system. That is a slight concern. What I would say is when you're actually looking at the loan books of a lot of these companies, they're not making huge amounts of loans into the Turkish financial system. I think this is fairly contained. It's a fascinating example in the emerging market space of what happens if you don't run your economy on a more balanced footing and you start having some negative political news. But beyond that, I'm struggling with wider ramifications.
Well, and you like EM, but if you come inside the Bloomberg here, you can see the lira is starting to now track EM or vice versa, that correlation picking up to 0.6. So what is a buying opportunity for you on that?
I think what we're looking for is some sort of peak in the dollar. That really is the entry point when you're starting to get into emerging markets. Now, I'm not going to try and time it to the very day, but what we're starting to see when we're looking out on long-term expectations is we believe the dollar will be peaking in the next few months. The reason being is that the trade and budget deficit, also known as the twins, and interest rate differentials suggest that the dollar over a long-term time horizon should be going down.
And we were hearing earlier, Michael McKee made the point here on our set that Turkey is not Greece. That obviously becomes the question of people's memories are not that short. What about more broadly in Europe? Do you worry about sort of the European story changing based on this?
I don't worry too much about the European story changing based on what's happening in Turkey. The European story itself is actually pretty solid. You look at the PMI numbers that are coming out for a host of different countries. They're looking reasonably good, ticking along at a nice pace. I think you're going to see a nice second half rebound in economic growth in Europe. There's been a bit of an inventory drawdown that I think needs to reverse in the second half of the year. That's going to help the European economies. I don't think Turkey's going to get in the way.
And we're definitely going to delve more into Europe as well as that exposure for banks. But what emerging markets do have the best opportunity right now?
For me, I'm actually leaning into the Southeast Asia Pacific ones, areas like Korea, Taiwan, and the ASEAN region broadly. Why? It's a trade story. In the late parts of the economic cycle, those regions do very well as you start seeing Europe, the US, and other developed markets really firing on all gears. What that does is it sees trade, things like consumer discretionary goes up, TVs, iPhones, cars, the parts to which are not made in developed markets, they're made in Southeast Asia. That's the area of focus. The valuations have been taken a battering. The dollar's a little bit stronger. Now's probably the time to be looking at that area.
So as Alex mentioned, this Alex, not this Alex.
It's
well, you
confusing.
mentioned it too.
The Alex is
The ECB is becoming concerned over European exposure and specifically banking exposure to Turkey. So let's bring in Ven Ram. He runs our FX and rates coverage in Europe. So Ven, what are we to make of this from an ECB perspective and specifically that concern about financial service exposure here?
Well, obviously, they're right to be concerned about these banks. They have singled out BBVA, UniCredit, and BNP Paribas as banks to be concerned about, and that's taking the euro down with it. We saw the euro dropping pretty much the most in to the weakest level in more than a year. But it's come off those declines, but those concerns are going to linger, which means that the pressure on the euro is going to continue going forward, because keep in mind that investors are not long on the euro as it is, even before this report, because of the outlook for the European Central Bank. They are not likely to raise rates, as we know, until the end of summer next year, and the definition of summer itself is under discussion, as you know. All this is playing into the euro, and obviously it's on a decline, and it's not clear, even though it's come off the lows, as I mentioned, how long is it going to hold its keel is an open question.
And so I just wonder, I think about the newsroom over there in London, Ben. I mean, this must have sort of amped the interest over there as we were talking about with Alex here, that this idea of a contagion and exposure, I mean, it came more to the fore. Those are some big names that we're talking about, BlackRock, Allianz, Goldman, all having some exposure here. Are people really starting to get worried as you talk to them?
Well, at the moment, there's no widespread panic. There is widespread panic on Turkey itself, but on the contagion fears, I would say less so. It is a concern, but these are sophisticated investors we are talking about, and therefore you would imagine that they have kind of hedged their currency risks. They know Turkey is a country where it's been a train wreck in slow motion, so people know what is expected if Erdogan doesn't act. So I think that these being sophisticated investors, they are kind of hedged very well, and which is why you see that the moves are quite contained, and that's one of the reasons the euro has come off its lows as well.
I should point out that we have an analyst from Alpha Value basically saying that BNP Paribas risk equivalent in Turkey is upwards of 3%, so 2.5% to 3%. So it's something, but it's not 20 or 25, but it's there. Alex, so first of all, just with euro dollar, what do you make of the massive slide we've seen over the last 2 days? Like, what is that about?
I think that what that is very much about US strength versus European economic weakness in the first half of this year. For me, going into the second half of the year, and we were talking about this earlier, I think European strength is going to come back. I think there's an inventory drawdown that has to unwind. I think we've seen the peak in US economic growth. 4.1% in the second quarter is going to be hard to accelerate off for the United States economy as that fiscal effect fades. And as we move into 2019 and the possibility of an ECB rate hike comes onto the table, and the US potentially pulls back on more rate hikes, you're going to see this correction happen. It may take a few months to filter through, but I think the direction of travel is downwards for the dollar going into 2019.
So is it going to be a broad Europe story for you, or is it regional? Because just specifically in terms of, say, banks with Turkish exposure, for example, that's really a France and Italy and a Spain story. You can see it even reflected in the bonds of the peripherals. How do you view it?
I think for me, going into 2019, I'm going to get more excited about the European banks. Why? Well, the removal of the negative deposit rate will be removing some of the earnings pressure that has been placed on European financials. Now, I don't have a particular problem about the state of European financials. They've increased their capital. Their cash controls look pretty good. I don't mind sitting on the debt of European banks right now. They're just not the most profitable industries there. Therefore, right now I hold the debt. In 2019, I might be more interested in holding the equity.
So, since we have you here, and we've been talking so much about Turkey and Europe, I got to ask you a question about the U.S. We talked about Evans getting a little bit more hawkish. How do you feel about the fixed income market given the backdrop that you're seeing from monetary policy here in the United States?
So here in the United States, for me, I think at the front end of the yield curve, I'm pretty comfortable with where we're going. We've got 2 more rate hikes later on this year. I'll be looking for some guidance about whether it's 2 or 3 in 2019, but I don't think there's a huge number of question marks. For me, the focus is on the back end. The yield curve is fighting around this 3% level at the moment. I think it's going to break it before year end, move up towards 3.25 by the end of 2018, and push on to 3.5% going into 2019.
And Ben, quickly, I know you haven't seen this BNP Paribas situation, but the analyst saying that you could see BNP exiting Turkey altogether, and that could be about 3.5% of its market value. Are we going to start seeing notes about this getting out altogether because of sanctions?
Yes, it's eminently possible because they may want to get out of Turkey altogether at some stage. That's definitely the impression we get here.
And that could be 3.5% of its market value, according to this analyst for BNP. So pressure on those banking stocks continues, the worst performer over in Europe. Ben Raim, thank you very much joining us from Bloomberg, and Alex Dryden of JP Morgan Asset Management. And we are awaiting President Erdogan getting ready to speak. It's his press conference today, then followed by his financial minister, son-in-law. Can he stem the rout in Turkish assets? This is Bloomberg. This is Bloomberg Daybreak. I'm Alex Steele. You're looking at a live shot now of the press conference, waiting for President Erdogan to make a statement. We were waiting for that at 7 a.m., and it looks like things are starting to happen now. And in the markets, it's a decidedly risk-off field due to Turkey issues as well as the potential contagion that's spreading. Dow Jones futures off by almost triple digits. European banks getting hit the hardest as a lot of French, Italian, and Spanish banks have exposure to Turkey, and analysts warning that potentially that might harm their business with the bad loans, and they might have to pull out of the country altogether due to sanctions. In other asset classes, it's a very similar story to a risk-off feel. Euro dollar getting hit the hardest. The ECB warning of these bank exposures to Turkey down 0.6%. The dollar being the safe haven of choice. I'm seeing calls now for the lira to hit 7. That would be an unbelievable move. Talk about a falling knife there. And the 2-10 spread flattens now at 26 basis points as you want to buy bonds. That's the thesis, especially going into that CPI and all the geopolitical risk over the weekend. And crude kind of on its own drum right now as we await President Erdogan speaking. Still with us here, Alex Dryden of JP Morgan Asset Management, and also Joel Weber, head of Bloomberg Business Week. Guys, great to see you both. So, Joel, I wanted to start with you because we were going to talk to you about the life of Mnuchin and how he got to where he is, and now he's the guy. He's the sanctioned guy.
Yeah. So we were really interested in Steve Mnuchin, and that's why we wanted to put him on this week's cover. Another compelling cover. The thing that I like about this story is that it's a little window into Treasury under Trump, right? That hence the cover line, how to be Trump's Treasury Secretary. One thing is that you kind of are a little quieter than Trump. You have a place, right? But also, here, to bring it back to sanctions, this is a guy that knew nothing about international affairs, international trade, China, and yet now he is the guy leading all those efforts.
Well, and it isn't, I'm so glad you pointed that out, because as he has defined his role, it is very different from previous Treasury secretaries, who really focused much more on policy. They talked a lot more about the dollar. They talked a lot more about a strong dollar, as a matter of fact.
There's been a couple gaffes.
There's been a couple gaffes and a couple diversions from previous policy. As you say, this guy, Mnuchin, has taken a little bit of a different tack. And the sanctions have been one of the most important pieces of his portfolio as it's emerged.
Tax policy, trade, and sanctions. Those are the three things. And actually within Treasury, there's sort of a feeling if you're not in one of those three buckets, you're sort of out in the cold a little bit, right?
That's so interesting.
So he's got a little wheelhouse. Those are the people that he's been, working and will continue to work. And so between Iran, Venezuela, whatever happens in Turkey, and then the big one that we're all going to be watching is Russia. He's the lead enforcer of Russian sanctions heading into midterms. It's just yet another one of the things that makes all this time so compelling.
Well, and Alex, as Mike McKee mentioned earlier, the sanctions on Turkey so far have been essentially very limited. It's on two people. It's not the broad sanctions that we've seen on other countries, which is a fair point. The other point, though, is that this is a geopolitical hotspot at this point, and part of what feels like is driving this market so insane as it relates to Turkey is the potential of more sanctions from the United States.
Right, and it's a great point. And Alex, then to your wheelhouse, and how do you hedge?
What, against Turkish risk in particular?
Geopolitical risk in general. You have to think, it has to factor into your market thesis.
Sort of a sanction-rich world, right? How do you deal with it?
The problem is the level of unpredictability that comes with that. It can be triggered by as much as a tweet that can see markets sell off. Now, for us, when we're looking at geopolitical risk, we tend to be more focused on the long-term perspectives. And it's about whether or not you think that this geopolitical risk is going to leave too many scars on the economic backdrop of a particular country or a particular asset class. When in particular turning to the trade discussions, we see a lot of noise there, but the actual economic impact has been somewhat limited. So therefore, for us, when we're seeing investor sentiment getting rattled over trade, it's a buying opportunity because we don't see it changing the economic backdrop, therefore not looking to try and hedge.
But I like that Alex brought up tweets, because when it's like different management styles. So how do you deal, on the one hand, when you have a president who's tweeting and basically no longer doing policy announcements, he just does it through tweeting, versus Mnuchin, who actually has to get things done?
Yeah, so and that's been a really interesting thing about Mnuchin, is that he's actually like the almost like the decipherer of Trump, and he's had to walk things
What
back.
he really meant was,
yeah, exactly.
That was Kellyanne Conway during the election. Yeah.
Or in Argentina, right, where Trump comes out with a big Fed tweet, and Mnuchin has to tell all of his counterparts, like, no, I've talked to him. He's not going to have a heavier hand with the Fed, right? Like, so yeah, he is this translator, and because of that, he has to let Trump have a more public profile, keep his mouth shut in public, and then back channel. And that also speaks to these other dynamics: Navarro, Lighthizer. I mean, it's a shark fest, and,
right.
and here's Mnuchin trying to be one of the last remaining moderates, actually.
And also worth noting, I think, as we await President Erdogan, that President Erdogan is a guy that the President of the United States has cottoned to a little bit. You know, when he has been at big meetings, that's a guy that he has actually sought out and has a style that
There's some interesting parallels too between between Trump, Erdogan, and how they actually interact with government officials who are heads of Treasury and finance departments.
And some of whom may be related to them. And given that we're awaiting an additional press conference from Erdogan's son-in-law, who's also the finance minister.
Right, but also Iran, when you bring that into the game too. So there is a sort of narrative that eventually countries like Iran will wind up caving because it's too much economic pressure. And the other side of the narrative is like, why would you do that? Because now you have someone to blame. And you heard Erdogan the same thing. As you come into these economic struggles, we're going to fight back. So if President Trump is giving basically the other countries someone to blame, that means we're going to continue to hit at these stalemates, Alex. So I understand you want to look for opportunities, but how do you deal with that downside?
I think one of the areas that you want to be taking a look at if you're an investor trying to hedge, particularly against this sort of heated Middle Eastern political environment, is to look at the oil prices. Right now, the geopolitical risk premium baked into oil prices is at some of the highest levels it's been at since the start of the Arab Spring. So what you're starting to see is investors being a little bit nervous about the geopolitical shifts that are happening in an area that is responsible for 30% of the world's oil supply. Any sort of disruption or a fuse that a flame that starts could see oil prices being disrupted. If that looks like something like the closing of the Strait of Hormuz, for example.
Oh my gosh, we'll forget about that.
That would be a significant rally in oil prices. That may be a way to build in a bit of geopolitical risk premium, at least to this part of the world.
I feel like you just set him up to bring it back.
No, I actually didn't. I swear to God, I didn't do it. I swear. But we are seeing the proxy wars to that point. I mean, you saw the Houthis sort of attack Saudi Arabian vessels, even though it wasn't Strait of Hormuz. So there is the trickle-down contagion from that respect.
Well, and let's also not forget, one of the headlines that got lost, it feels like, in the shuffle this week is the political tensions between Saudi Arabia and Canada. Of all places.
Yes.
That
another leader who's very confrontational.
Right, absolutely, and that has an impact, because I'm going to bring it back to oil again.
Because it's all about oil. They keep telling everybody that.
And but that does that's the sort of, I would think, confrontation, for lack of a better term, that would roil the Middle East in an entirely different way, potentially.
Yeah, and that's where it's going to show up in the oil prices, and you combine that with a supply and demand dynamic that backs up oil to be slightly higher than where it is now. On the supply side, you're seeing a lot of disruption, particularly to production out of areas like Venezuela. If you then look at the demand side, we're still seeing a global economy that is continuing, in our mind, to pick up some momentum, that is eating through a lot of inventories. Yes, US shale oil production is keeping a little bit of a lid on that, but it doesn't offset some of the swings that could come out of the Middle East.
So as we're waiting for President Erdogan to speak, we're waiting for that press conference. His son-in-law, the finance minister, will also be speaking later on today. today. What will stem the rout in Turkish assets? SocGen says you could see a 600 basis point hike will be the only thing that you could really need. So I want to also bring in Jennifer Ryan. She's a Bloomberg opinion editor, and I want to bring in a specific quote from one of your columnists saying that there are only two ways that the diplomatic rift between U.S. and Turkey can end. You got a compromise that salvages the relationship as best as possible, or a complete rupture with devastating consequences both for Turkey's economy and America's regional strategic interests. Either way, there's no going back to the way things were. That's a pretty binary option there, Jennifer. Can you give us a lay of the land of what we're going to be looking for in Erdogan's speech in just a few moments?
Well, I'm sure what investors are going to be looking for is some clear signs about what the policies will be that will get the economy back on track and snatch this lira rout. I mean, one thing I would like to point out is that this is not just something that's a problem for Turkey. It's something that's also bleeding over into European banks. And our columnist Lionel Laurent had a piece today that looked at what the damage there was.
Right, absolutely. And barring kind of coming in and saying, we're going to see a hike to 600 basis points, for example, or by 300 basis points. The other options on the table are also the IMF, going to the IMF with a hat in hand and sort of looking for some kind of bailout. What are the other options, and what's the reality behind them?
Well, one thing that at Bloomberg Opinion we've been really focusing on is this idea of who is it that's leading the economic policy here. And something that's really put off investors is that Erdogan replaced the officials that were really well known for speaking directly to the markets with his son-in-law. So it's not just that we see one hike and think maybe it's one and done, but we've got to see that there's going to be some continued dialogue with investors so that they can see that there is going to be some sanity restored to policymaking.
Well, and Jen, as you alluded to, this would be a big turn if President Erdogan decided to raise interest rates, given how vocal he has been. Again, an echo back to the United States and the President of the United States, Donald Trump, weighing in on those sorts of policies as well. What is your sense as you look at it and as you talk to the columnists there about the sort of broader geopolitical impact of all this playing out as it is?
Well, what's at stake between the one way to really look at it is to consider what's at stake with the relationship between the U.S. and Turkey. The U.S. is in a position to lead a rules-based world order in the region, and Turkey is an excellent gateway for that. And by the same token, the Muslim majority nations in the region there's none of them that can step up and replace Turkey as a gateway to the West. So for a sensible order to persist, there's going to have to be some continued dialogue and some improvement in U.S. and Turkish relations. And it's really hard to see how that's going to come about.
You couldn't have said it better yourself, actually, because right now we heard potentially from an aide telling Fox News that Trump is working to bring the pastor home from Turkey. So that's not necessarily a conciliatory or open relationship.
Well, and it is an interesting point. I'm glad Jen brought that up because, as Alex was mentioning earlier, we are in a situation where not too long ago, Turkey was on a much more progressive path, and it does hold a crucial place in terms of the region and the region's sort of influence and relationship with the rest of the world, and especially the United States and the West.
And there we're looking at a live shot of the conference. We're waiting for President Erdogan to begin speaking. Apparently, according to a TV station, he said that Turkey will prevail in economic warfare triggered by U.S. sanctions over pastor. You could also make the argument that potentially that's a diverging conversation versus the economic trauma that the country is also undergoing as the lira continues to get pounded at a record low. And in the markets, the contagion is felt all over different asset classes. You have U.S. equity futures down, Dow almost off by about triple digits. You have European stocks getting hit hard, European banks getting hit particularly hard. The Financial Times had a report that European banks from the likes of BNP Paribas, for example, and UniCredit that have exposure to Turkish banks could be hit, could perhaps have to close their shops up there if the U.S. ramps up sanctions as well. So where do you go? You go to the dollar and you go to bonds. That's pretty much the theme of the day. And you avoid anything like the euro and you avoid anything like the lira. Still with us here around the desk are Joel Weber, Bloomberg Business Week, and Alex Dryden of JP Morgan Asset Management, and Jennifer Ryan and Bloomberg joining us in London from Bloomberg Opinion. So, Joel, you had a great cover on Mnuchin. Set the stage for us of what the administration will be thinking about as we're waiting for President Erdogan, and as his rhetoric is going to be about U.S. and Turkey. He doesn't want to talk about inflation.
Yeah, right. Well, and the inflation theme is going to be the real one, I think, to watch. Of like that's going to be, I think, the enduring theme for them to grapple with. And it's something that if they can't get a control on it, like we don't know what's going to happen. And we've done multiple stories about this in Business Week. There's this institutional problem there. The people who have been in charge of the finance ministry are no longer there. So it's really like whose hands are on this wheel right now.
Right. And Alex, this whole idea of not being able to really unintertwine, I guess. I don't think that's a word. Unintertwine.
It's Friday.
Let's check that Scrabble dictionary.
There's a lot going on.
When I give grammar advice, no way no.
But trying to separate the geopolitical from the geoeconomic has got to be one of the biggest challenges of your job in this sort of case, because as Alex was just saying, President Erdogan is going to make this all about politics. It's going to make this about the relationship with the U.S., even while he has a massive economic and financial problem at home. So how do you make sense of it?
It's definitely challenging. It's one of the more challenging aspects of the job, is trying to work out when politics is actually going to leave marks on the economy and how much of it is noise, how much of it is actually going to be implemented. A lot of what we're seeing in Turkey, unfortunately, is politics really leaving some marks on the underlying economy. That's when you have to sit up and pay attention. There are geopolitical events elsewhere in the world where it is harder to try and understand what the economic ramifications. Go back to the start of this year. The North Korea debate, for example, is a little case study where, despite it having quite devastating consequences potentially from a geopolitical point of view, trying to actually understand how that implements markets is really difficult, because there's a myriad of different potential outcomes, which makes it very difficult to price. With Turkey, however, it's a pretty binary outcome about where this thing is going. If you keep going down this path, Turkish financial assets are going to keep seeing some of the pain and suffering.
But if you hedge geopolitical risk based on the U.S. over the last couple of years, or even Brexit, it didn't pay off for you at the end of the day. Jennifer, the three options that I keep reading about that Mr. Erdogan can do, and the finance minister as well, you got some kind of dramatic action, hiking rates a la Argentina did when they hiked to 400 basis points. They can go to the IMF, or they can do some capital controls. In your research and your writing, what's the most likely?
Well, it's kind of hard to put some odds on any of those, because, we don't know what Erdogan's planning to say. We haven't seen his speech. And then he could just come out with the same line that's been trailed all this time this morning, that, he's going to be very happy to continue to fight an economic war. But, looking at the three options that you just laid out there, there's what investors want to see sort of as an immediate measure, and then there's what's going to be more
Okay, I'm going to
amenable
stop you there. Jennifer, hold on, because we are now looking at a rally as President Erdogan gets ready to speak right now in Turkey. Let's listen in as we hear about how he will confront U.S. sanctions as well as market turmoil.
Onun için ilk fırsatta hemen çıktık ve Bayburt'a geldik. Turlarımıza Bayburt'tan başladık. Hem sizlerle kucaklaşalım, hasret giderelim.
We are working on a translation for you. As you can see, it's a heavily populated rally. No doubt President Erdogan will be playing to his base and talking about U.S. aggression and how they will aggressively wind up pushing back, especially as a presidential aide tells Fox News that they will do everything they can to get that pastor back. You can see that large crowd forming in Istanbul. We're also waiting for a press conference from the finance minister, his son-in-law as well, and what, if anything, they will do to stem the tide of the lira sell-off. SocGen says 600 basis points is where we need to sit. Michael McKee, our Bloomberg's economic editor, joins us now as well. Mike, as we talk a lot about geopolitics, can you bring us into the economic world of Turkey right now?
It's not a good picture. Turkey spent a lot, the Erdogan folks spent a lot to get him reelected to stimulate the economy ahead of time, and now we've got inflation at about 15%. And so they've got a problem there already, and a very large current account deficit. It's going to make it a little bit harder for them to pay their bills if the lira keeps falling. And then a lot of companies who have dollar-denominated loans, and they're the ones who are really going to feel the pain first, as course, the dollar continues to strengthen against the lira.
And Jennifer, before this, we were talking about the three kind of options, right? It was IMF bailout, capital controls, or central bank action. And we were wading through how all three of them are probably not realistic.
Yeah, and again, I think it is really worth thinking about what investors want to see in the near term and what's going to be needed for a sustainable recovery in the longer term. And to have investors' faith and really have them be on side, what you're going to have to see is this strong man climbing down from some of his really unorthodox views about monetary policy and what the economy actually needs.
So we are getting a translation now. Let's go live to hear what President Erdogan is saying at this rally over in Turkey.
Today is that day. Before I continue, I would like to share our condolences and our good feelings and support wishes for those who suffered from the flood problems in Ordu. I hope God will protect all of us from such terrible occurrences. There are those who suffered with damages at their houses, workplaces and fields, and our state, our government will lend the necessary support to those who are the victims of the flood tragedy. I will also get together with my old friends from our Lyceum times, and I also would like to announce that the public opening of the circular travel route that is built recently, and it is going to be very beneficial for the whole region. No one should be concerned. No one should be concerned. We have enough, and we will also to combat the situation. But I still repeat, if there is anyone who has dollars, gold or euro under their pillows, I'm asking them to take them into the banks and exchange them with Turkish lira. This is our response this is going to be the response of my nation to those who are making this move, hostile move to our country using the currencies. Today is the day when we need those currencies, foreign currencies. Let us respond duly to those people who are making our economy suffer. And Bayburt is such an area which is famous with the beautiful nature around, as well as the mature and understanding people of Bayburt. In the history, Bayburt had a critical contribution to Turkish history, a very special role they played. Our ancestors in Bayburt, and they have settled in this area after Malazgirt victory, and including Dede Korkut, the leading name of our literature. Bayburt is an iconic city where many important people resided in the past. This is such a critically important location, and this city both suffered from occupation and also became independent. So Bayburt people knows the importance of independence, and therefore I would like to repeat that if you have any dollars, any euros or gold, please exchange them with our domestic currency so we can respond properly in unity as a nation. Are you up for this? Are you ready for this? Brilliant. This is the strong point. This is the strongest point we have, that is our unity, and this is going to be our response to the West. And Bayburt was one of the leading cities in our independence war. And in the same way, they continue to be leading in terms of the support for Recep Tayyip Erdogan. Those supporting huge numbers of support gives us a very, very clear message. In fact, 81 million of our citizens, even those who voted for other party, unite with us in this message. Our nation is expecting us to stand up for our 4 rules. Let us raise our voice so that no one in the world will, everyone in the world will hear. Are you ready to give our answer? One nation, one flag, one country, one motherland, and one government, one state. This is our understanding to grow our country, to carry our success to future at further higher levels. Before we came here, before the Friday prayers, someone, a religious leader in Bayburt, apparently built up a museum on the hills overlooking Bayburt. We have visited this museum before coming here. And we have seen our grandmothers, grandfathers, what they have produced. We have seen the pottery they have created. You have created so much. We have seen them all. An academician, a dean of a university from Bayburt, came back to his area and built this museum. We thank him for doing this. This is how we protect our nation. This is how we serve our nation, even at a regional level. So in order to do this, we are not in fear of challenging these countries, any number of countries, and in the same way we never had the fear to challenge and fight back to the terrorists of the world as well. So we are not going to fear to behead, to remove the heads of those who are betraying our countries, because we are only responsible to God and to the people. We account back to you, not to George or Hans. We account back to Ahmet, Mehmet, Ayşe, Fatma, to you people, to this nation. We have started this campaign. We have taken up this route in order to be servants of these nations, not to dominate, not to rule as such. Other than that, we don't care whatever plots, whatever scenarios we are facing with. We might suffer difficulties a day or two, but we can overcome that sort of difficulties. They have done everything they can to bring our nation into suffering. They have tried every type of plots and sinister attempts, and the republic we have founded has not been shaken with these plots. They have tried everything by coup d'etats and other attempts to ruin our democracy, but on the contrary, our nation did not give up, and on the contrary, fortified our democracy. They tried to damage the main body of our democracy, but our nation did not give up, lent the necessary support, and made Turkey stand up again in unity and strength. Bayburt people has a saying. They talk about the herd going backwards, but the lame leading. We can see that sometimes the lame ones, the untoward people, came to leading positions and became strong. But we have combated, we have overcome those situations. We know who is around, who is looking for power for their own ends or for our country's end. So we are confident, we are hopeful for a good, strong future for our country. On 24th of June, the results of election has been an important demonstration of how strong the democracy in our country is. It was a worldwide lesson to other countries. A change of government has been held in the biggest possible democratic approach. We have successfully transited to the new government system, new presidential governing system. This is achieved by the very nation of our country. So our country, our nation is entitled to be in the top of the list of the democratic nations. We are facing yet another meaningless wave of attacks. On the night of the 15th of July, there were those who took side not with democracy but with the coup plotters. And in the same way, they didn't observe, they didn't obey to the will of the nation, and they took other routes. They supported the terrorists. In the recent negative developments in our economy is yet a different aspect of this unpleasant developments. Neither in macro productive levels, nor in banking system, nor in production levels. We don't have even the minimal difficulties, but we still suffer from an artificial financial pressure. These attacks have different reasons. This is obvious. That sort of approach displayed by those countries, unfortunately, the relations between us and those countries will suffer from irretrievable damages. We don't have any problems with any countries. So in respect of the issues, we have mutual interests. We cooperate with these countries, and if we differ in our approach or interests, we try to negotiate and work out our differences. However, if it comes to a point where they want us to compromise from our independence or economic independence, we cannot compromise. We cannot compromise. We cannot yield to any pressure, regardless of where the pressure is coming from. Tanks, planes, bullets will not make our nation fearful, and this sort of threats will not make our nation fearful either. They don't know our nation very well. 81 million citizens, and the supporters in the world of these citizens will be able to combat in any circumstances. We are such a nation, we can get together and act in unity. And our ancestors, as a saying, do not have overconfidence in your qualities, because you can lose many qualities, but have all the confidence in your God and you will not be shaken. We only trust in our God. We don't trust anything else but our God. In another saying, which is written in Ottoman, we put our confidence in Allah, and we embrace every good approach, every well-intended step towards our country, and we have done so in the past, and we will continue to do so in the past. However, for any negative developments, for any untoward developments, we are prepared. Currency rates, interest rates, economic threats make some people feel hopeful that our country will suffer in economic difficulties. There are interest rates, lobbies and others. I'm telling them, I'm addressing them, don't get your hopes high. You will not be able to crush this country. You will not be able to raise your interests. You will not be able to benefit from the suffering of this country. There are temporary conditions. Yesterday you may have different parameters. In the future they may be different, from Iran to Russia, from China to European countries. With many countries we have taken important steps towards finding different alternatives. What really counts is the faith in our hearts. As our famous poet says, the real gem is the faith in people's hearts. And if you don't have the faith in your heart, it's a burden in your chest. This is what we think. So our strength comes from our faith. Our strength to fight is also based on our faith. So everyone and every country who will march on with Turkey will win, but those who make calculations to make our country suffer will regret what they have done in the future. However, in such circumstances, we have some important duties. My sisters, dear mothers, dear brothers, on 15th of July, we have defended our country at the cost of our lives. Remember, in the same way, we are facing economic attacks today, and we need to protect and defend our country in the same level of determination, because this is no different. Our economic blockade of our country by currency and interest rate plots is no different from the military coup attempts. We will fight back in the same way in every mean we have. We will fight back. This is our biggest response if we work harder, increase production, increase exports, increase employment. This is our real answer going to be. Every individual in our country, I invite them to use all their resources to increase employment, to increase product and export. We have filled the city squares when we were campaigning against the coup plotters. In the same way, we are doing this for this economic campaign.
President Erdogan speaking in Turkey, roiling the markets, as his recommendation for the markets is that everyone should take their dollars, euros and gold and go buy the lira to help support its currency, and asset classes taking it on the chin. Stocks rolling over, the lira surges past 6.2 per dollar, and bonds continue to sell off as well. Jason, if we were looking at some kind of hope or roadmap for how they were going to navigate the drama in the financial markets. We are not getting one.
Well, the options that were laid out by various people we've been talking to all morning were an interest rate hike, a substantial interest rate hike, which was unlikely given what President Erdogan has said before, some sort of capital controls, and his answer, at least so far in this very campaign rally style speech, is go into your mattresses, go under your pillow, take those foreign currencies and exchange them for lira. The lira not responding very well to that.
No,
advice.
not at all. And one of the most potent statements is Turkey won't give in to economic hitmen. That to me is a very striking statement. We're also waiting for his son-in-law, the finance minister, to speak as well. You can see the podium there. We'll be waiting to see what he has to say. Obviously, things like capital controls, central bank issues potentially coming out through him, as Erdogan seems to be really stumping at the end of the day and campaigning to a very large crowd of supporters. So we're going to keep listening in as the markets continue to roll over, risk-off feel in the U.S., buy dollar, buy bonds, sell everything Turkey. That is the theme of the day. The Turkish lira moving past 6.2 per dollar. Let's continue to listen in.
Precautionary steps, and our government bodies are working hard towards these protective steps. We are determined to continue. No one should be bothered and keep just looking to the currency tables. You should be able to look beyond the currency table. You should be able to look into the bigger picture. This is what I want from my people. In 81 of the provinces in our country, we will work hard to develop, to make these provinces become bigger. And we will base these attempts on a certain system. All the services, all the investments made in particular provinces, we share this information with our citizens. Before coming to Bayburt, what we have done in Bayburt, what benefits will be enjoyed by Bayburt. This is the smallest population we are facing in a province, Bayburt, and we have quadrillions of 4.5 quadrillion investment has been made in Bayburt. 507 classrooms have been built in education, and we have built a university for Bayburt. And for higher education students, we have built dormitories, and further 1,000 capacity dormitories are being built, and women and children diseases hospital has been built, dentistry centers, clinics, family health centers have been built. Altogether 10 health facilities have been built and started serving our country, our province, and the 2 big hospitals are in the process of being built. We also have built 1,000 social housing, and in Bayburt we didn't have multi-lane roads in Bayburt, and we have introduced these roads into Bayburt, 2,000 kilometers long. And as I said, we have visited Bakshi Museum, and I was able to speak from there, and it's such a big distance. 650 million liras is the cost of a tunnel in Trabzon, Ashkale, and we are going to complete that tunnel in 2 years' time. And in Kopda tunnel is being built, and more than half is completed. In 2021, it will be ready to be used. And Sokullu Bir Viaduct that will help Bayburt's transport hugely is ready, and an adjacent one is almost complete. These connection roads will be ready to serve Bayburt people next year. And Kale Geçit Bayburt connection road will be opened next year, and Bayburt Çaykara road, it's not the wrong name, is it? Çaykara, I see. Çaykara road will be opened the year after that. And 2 million passengers a year will benefit from a new airport. You are aware of this, aren't you? Mr. Naci, you will be following this up. You know what I'm talking about. You see, the capacity of this airport will be 2 million passengers per year. So, Gümüşhane, Bayburt will be able to benefit from their very own airport. And God willing, in 2020, our airport will start serving Bayburt people. We almost completed 2018, so in 2 years' time, we have also resolved the problem of drinking water problem. Çoruh River are being attended to prevent possible floods in the future. In the First World War, 6,035 hectare large area will be a historical national park in memory of those who fought against enemies in the First World War. You will follow this up.
We're continuing to monitor President Erdogan of Turkey speaking to a very large crowd. Feels like a campaign speech, saying that they won't give in to economic hitmen, say that there are no issues in Turkey, macroeconomic data and the banking system. The market in no way believes that. Sell-off in the bond market, sell-off in the equity market, the lira moving past 6 per dollar. I want to break it all down for you in many different directions. Joining us is Michael McKee, Bloomberg's international economics and policy editor. Mike, what have we learned in the last 20 minutes?
Very little. Kind of the strongman standard speech blaming outsiders. In this case, it seems he's really putting the blame on financial markets, but unnamed financial markets. He hasn't named any countries by name, but basically saying they're out to get Turkey and we're not going to let that happen. The only solution he has suggested is that Turks who have euros or dollars or gold under their mattresses should come in and exchange them for lira, and that will solve our problems, he said. Obviously, the market doesn't believe that. The lira is tanking on this, and maybe on the idea that the Turkish nation won't give in, won't back down, comments that he was making. The market may be reading that as the various suggestions for ways to deal with this, which would involve Erdogan backing off some of his previously held positions, he's not going to go for.
All right, Bloomberg's Michael McKee, thank you for sticking with us, for wrapping that up with us. And now we want to get to the trade. Joining us on the phone is Paul McNamara of GAM Investments, investment director for emerging markets and fixed income. There's two questions here. When you catch a falling knife, Paul, and how many sellers are still left in the market?
Well, the falling knife, I mean, at some point Turkey is going to be a fantastic buy. I mean, the pattern tends to be when you get a big sell-off like this, it creates value. But it's not going to be until something changes. I think not just the policy stance of the Turks, they just don't have enough foreign currency to cover their needs, especially if the European banks are either spooked or reined in by the ECB. Our best guess is that they're going to need the IMF. Conceivably, they could put together a coalition of, Chinese, Qatari and so on money. But they need a source of dollars and they need to change their approach. And I think the message we're taking from that speech is that that's not on the agenda right now.
And Paul, given what we have heard and seen so far from President Erdogan, how much do you worry about contagion at this point? Or can this be contained to just a Turkey trade?
It can be contained to just Turkey because there aren't really any other emerging markets which have, exactly the same toxic blend that Turkey has. Only Argentina really has the external deficit, and they don't have as much domestic debt. So from that point of view, it can be contained. Our big worry is that if Turkey really sort of goes into a major crisis and they impose capital controls, that's the sort of thing that brings the asset class into sort of disrepute. So that would be the thing that would worry us most. But I think, that we're several steps, weeks away from anything like that even being contemplated.
In particular, we say the FX market, it's all about, are we going to see some kind of stabilization and a hike in interest rates? You had Fidelity saying 1,000 basis point hike is what would be needed to stem this. How many sellers are still in the market to wreak havoc on these asset classes, Paul?
Well, I don't think there's anybody sort of out there sitting going, well, at sort of 20% 10-year bond yields, I wasn't interested, but 25 I'll pile in. It's not about interest rates anymore. I think that's the one thing where Ms. Erdogan actually has a point. Rate hikes are not going to cut this. They need dollars. And the trouble with hiking rates is that can worsen the problems of the banks, and the banks are really ground zero for Turkey's problems.
A quick question, Paul, then. What's on your shopping list today as we see the sell-off in Turkey sort of spread elsewhere?
We're certainly not buying anything in Turkey. There's value opening up across EM. We're seeing risk off. We're seeing a stronger dollar. The usual candidates, I think Brazil and Russia look a lot more interesting to us. We're very underweight or short where we can be in Turkey, and we're not doing anything to take those positions off even after today's move.
All right, Paul, thank you so much. Great to get your perspective. Paul McNamara of GAM Investments. All right, let's get you all caught up. President Erdogan finishing now his speech that felt very much like a campaign rally to a large crowd in Turkey. We're also waiting for headlines from the finance minister, his son-in-law, who's also speaking and looking for any signs of monetary policy. You can see the audience waiting for him to take that podium. In the markets, all Turkish assets selling off. The ETF here in the U.S. also down 8% in pre-market. If you want the trade is you're going to sell stocks, particularly European banks with exposure to Turkey like a BNP Unicredit, and you're going to be buying the dollar, and you're going to be buying bonds. You're seeing the 210 spread here in the U.S. continues to flatten as you have the 10-year yield coming in now at 2.89% as the risk-off continues. So let's get more detail on sort of what we can expect going forward. Joining us on the phone from Turkey is Ilter Turan, Istanbul Bigli University professor of political science. Walk me through what you've learned from President Erdogan, Ilter.
Say that again?
Walk me through what we've learned from President Erdogan in the last half hour.
Yes, I have been listening to him, and I think we have learned two things. Number one, that Turkey is facing a major international conspiracy to undermine its economy, and that the infrastructural investments will be continuing. Now, in view of what we have been talking about, or what you have been talking about, there is not a interface or a correspondence between these two approaches, because the president appears to think that the crisis can be essentially met by a number of local measures, mainly by encouraging acts of sacrifice on the part of citizens to take their dollars to the banks and take their gold to the banks. But whether those would be enough, even if people did so, to meet the needs of the Turkish economy is open to question.
And we are hearing now from President Erdogan's son-in-law, the finance minister. He is speaking in Turkey right now. If you want to listen to that in translation, you can go to Live Go. So, Ilter, I have to ask you, where does it go from here? How long will it take, in your estimation, for Turkey to stabilize at this point economically, given what you've heard so far?
Well, actually, this is an extremely difficult question to answer at the moment, because, one would have to first hear a new policy that would meet the challenge before making judgments as to how long it would take for the economy to stabilize. And what we heard from the president essentially does not propose to adopt new policies, but simply argues that the investments will be continuing, infrastructural investments will be continuing, and at the same time, when you examine how the Turkish lira has been faring against the dollar on a daily basis, the amount of value loss has been tremendous during the last couple of days. And I would be inclined to think that the government has to, number one, redefine its position before we venture predictions as to how long it would take for the Turkish economy to stabilize. At the moment, the government seems not to treat the existing situation as a crisis, and some things need to change for them to maybe think of it as a more serious situation than it seems to think at this particular time.
All right, Ilter Turan of Istanbul Bilgi University, thank you very much for joining us. So you're joining us here on set, Constant Hunter, KPMG Chief Economist, and Mark Pui, Bank of America, Merrill Lynch, U.S. Equity and Quant Strategist. Constance, you called this earlier when you came on set with us to talk about Turkey. Everyone was saying it is idiosyncratic. You said this is a big risk. What's the contagion effect longer term?
So first of all, we have seen this movie before. So this reminds me exactly of when Mahathir Mohamad from Malaysia in 1997 blamed currency speculators for the problems in Malaysia during the Asian financial crisis. It was 1997. This is a result of Turkey increasing its debt. There was an IMF report that was put out last year, and it showed a matrix of countries that were repairing their central government balance sheets and those that were not. And there were 3 countries that were in the far right-hand quadrant that were not repairing the balance sheets, where debt was going to increase even with record low interest rates. And those 3 countries were the United States, China, and Turkey. Right? So this is a fundamental problem of that they have taken on too much debt. Their banks have used the debt market to finance themselves. A lot of dollar-denominated debt has been issued, and that, to me, is really the crux of the problem. And so the playbook is that there is more contagion to happen and more bad market reaction to happen over the next several weeks before this finally plays out.
And so contagion, what does it look like? What does it look like in the immediate
Yeah, and here you've all brought up a really good point, which is that not that many people hold Turkey anymore. So the idea with contagion, of course, being you sell your good assets to fund your bad assets, and that's what causes the contagion. So here I think it could be further speculation against the lira, and then speculation that leads to, like you were saying, some of the European banks that are exposed to Turkey, and then that's going to get them to look under the hood. Bank of International Settlements just put out a report on Asian debt in general. A lot of it is financed by European banks. So there's definitely more contagion that could happen here.
So Mark, how do you hedge it?
I think you stick with what works. You look at the fundamentals, and the U.S. is continuing to deliver the goods. If you look at earnings revision ratios across the world, the U.S. is the only one that still has positive earnings revision trends. Emerging markets is been quite muted for a while. We've seen what's happened with Europe. We've seen economic data continue to deteriorate in Europe, and earnings revisions have been quite poor there. And we're just wrapping up Q2 earnings season right now. The fundamentals are stellar in the U.S., so I think you stick with the U.S.
Mark Pui, B of A, Merrill Lynch, you're staying with us, as are you, Constance Hunter of KPG. Quite a morning, Alex. KPMG. Did I? Oh, my God. I can't speak this morning. I'm all Turkish in my mind. We are getting a lot of headlines this morning, obviously, from Turkey, but more to come here in the United States, the news we need to get to.
Yeah, we're going to get Jason a Turkish coffee in the break as well. So as the risk-off mood continues all across asset classes, we're going to get the latest read on U.S. inflation, July CPI data on deck, along with Mr. Evans a little bit on the hawkish side yesterday, how that will influence markets on their risk-off day. This is Bloomberg. This is Bloomberg Daybreak. I'm Alex Steele. You got risk-off day in the markets across all asset classes here as we wait for U.S. CPI on deck. Dow Jones now up by triple digits. European banks getting hit particularly hard, especially those with exposure to Turkey, like a Unicredit, like a BNP Paribas. In other asset classes, you're buying the dollar, you're buying bonds. That's the trade. The lira off the lows of the session, however, now just past 6.1 per dollar. Crude moving on its own, but nonetheless, this is a dramatic risk-off day that we're entering here. All right, CPI data, here we go. If you look at the core, backing out energy, backing out food, does come in higher, 2.4%. The headline number coming in, though, just under that 3 handle at 2.9%. This feels like a very consistent CPI read, very consistent to what we heard with PPI yesterday, Jason.
Absolutely. I mean, it is notable. CPI, the year-over-year gain, the biggest since September 2008. That feels sort of substantial as we look at it as well. We'll have to see how the market reacts. Obviously, it's a little bit of a tricky market day given the usual low volume at this point in the summer, but also given what's going on overseas that we've been looking at all morning.
Yeah, and also just, a little bit of data there as well. We get average hourly earnings coming in, and that they were actually down by 0.2%. We're also looking at weekly earnings coming in at a little higher at 0.1%. So a little bit of data there on wages as well. In the asset classes, though, it's really going to be dominated by those macro headlines, as Jason was just talking about. You're seeing the dollar right around the highs of the session. So there you have it, the biggest annual gain for CPI since 2008. That nice headline coming in, headline number coming in at 2.9%. Still with us is Constant Hunter of KPMG, furiously looking at all the data, and Mark Pouet of Bank of America Merrill Lynch. Okay, so give me your impression on this, Constance. Is this inflation is stable, or is this an inflation rising story?
So I think inflation is creeping higher, and the concern would be, is there any catalyst that would make it shoot higher? And unless we see higher oil prices right now, I don't see a catalyst that would necessarily make it shoot higher. And that's because if you look at wages, they're still growing at a really modest pace. Now, at some point, everybody expects the Phillips curve to kind of kick back in, that relationship between inflation and unemployment, and for there to be higher wages. But right now, there just aren't the wages to have significant demand pull inflation. So for it to surge higher, we need a shock of some sort.
So, Mark, I want to turn to you in 1 second, but we do want to get to a little bit of breaking news here. Just crossing the Turmoil, ISS recommending that Cigna holders vote for the Express Scripts deal. You see the stocks moving there. Express Scripts up almost 4% in the pre-market. Cigna down slightly. This has obviously been a much watched deal in this age of big M&A, and some things getting approved, some things not getting approved by shareholders and by regulators. So let's shift back to the economic news. Mark Pouet of B of A Merrill Lynch, what did you make of the CPI numbers?
Well, look, I think exactly it's coming in line. We should be seeing a gradual increase in inflation. The economy is really booming right now. The U.S. is looking really good. We're seeing that evidenced in earnings. In fact, Q2 earnings, you've seen an explosion in CapEx spend. Companies' CapEx increasing 24% year over year. That's an acceleration from what we saw in the first quarter, which was 21%, which was already quite remarkable. So the backdrop is really healthy, I think.
Healthy enough to continue a rally in small caps?
Well, yeah, small caps, it's interesting. Small caps have benefited from weaker growth abroad, from the dollar strength, et cetera. I think when you dissect what's happened in the market, though, since the beginning of the year, is you've seen multiple compression across the various aspects of the market, while small caps is really the only region that has seen multiples expand. So from here, I think, given the leverage that small cap has, given that the fundamentals in large caps have been a little bit better, I think the momentum is for larger caps for the rest of the year.
And for the inflation data that we've seen, are we still protecting corporate margins at this point?
Yeah, because the wage part is there, but we have to also think about the tariff impact, right? Mm-hmm. So all things being equal, tariffs would increase the CPI. We've had a strengthening dollar, which helps diffuse that somewhat, but I don't think the tariff story is over vis-a-vis CPI. I think there's still some impact to be had going forward. And then, of course, this increased CapEx that Mark was talking about is a really important factor. We have 100% depreciation this year as part of the tax law change, and so that's spurring perhaps perhaps investment that we might not have otherwise had. And at this phase of the business cycle, that could be inflationary before it's productivity enhancing, which again would get us back to the Fed moving at a slightly faster pace.
So, Mark, if you're sitting at the Fed right now, you're looking at these numbers, you're kind of thinking about the things that some of the folks at the Fed have said over the past couple of days, including Charles Evans. How does this number make you feel?
Well, I think, they're not going to rely on one single number, but I think if you put the data all in perspective, it still points to continued hikes. And, I think it's fair to assume that September will likely see another hike. From a markets perspective, we're seeing we're not seeing really the trade data really affecting earnings yet. Some companies obviously have mentioned it, but when you talk about wage pressure and so forth, it's still being passed through. In fact, we saw sales growth of 9% year over year, which is an acceleration from the 8% we saw in the first quarter. We saw bottom line increase at 24%, which is an acceleration from the 23% we saw in the first quarter as well, when consensus was expecting Q1 to be the peak of earnings, right? So that was, I think, quite remarkable. You continue to see an acceleration in the data. So bottom line is we're seeing very healthy economic data in the U.S. We're seeing inflation that, yes, is ticking up. It's still fairly muted. It's still a constructive backdrop for the fundamentals in the S&P.
On the flip side, we spoke to Mike Wilson of Morgan Stanley, and basically what they did is brought their rate hike forecast forward. So 4 this year, 3 next year, but really potentially a recession at the end of 2019, 2020, a mild one at that, and that it's a defensive call rotating into utilities out of tech. Is that the right framework to be looking at the economic scenario right now in your view?
So I think it's particularly difficult to make a recession call in this environment because there's 2 things that cause recessions, right? They don't just die of old age. They're either caused by a shock or they're caused by shortages that lead to inflation, which lead to faster rate hikes, which causes the recession.
Which I think was their point. Which they're going to bring it forward, right. And therefore that's going to be.
And we've been there. We've been in that stance for about 6 or 7 months. And so that's my view as well. But there's risks to the timing on that. Right. So we don't, I think, have enough visibility to be very precise on the timing. So my caveat on the timing is that's about the timing, but stay tuned because it's going to be data dependent.
So, Mark, you're a U.S. guy. Does this make you feel better about the U.S. versus the rest of the world? Are we seeing sort of a divergence here?
We are, and we've been seeing the divergence for a while. I mean, the bottom line is it's follow the fundamentals. And if you look at, quant factors, for example, what's been the best performing quant factor in the market? It's been companies that have seen positive upward earnings revisions, right? So again, doing your homework is paying off, and shareholders are being rewarded for that. And in fact, even in this quarterly earnings, what we saw after about 2 years of not seeing rewards for companies beating on expectations, you're starting to see those rewards again. So again, rolling up your sleeves, doing your homework has been paying off for those fundamental investors.
It's a really good point. So Mark Pouet of B of A Merrill Lynch and Constance Hunter of KPMG. Thank you very much for joining us. So, Alex, I want to go back to those headlines around Cigna and Express Scripts. ISS recommending Cigna holders vote for the Express Scripts deal. You're seeing the pre-market there. Cigna down about 1.5% and Express Scripts up about 3%. This, of course, is a pretty contentious deal. Carl Icahn figures into this. He has been pushing to derail this deal. This is a $54 billion takeover of Express Scripts by Cigna.
Yeah, and he basically says that they're overpaying at the end of the day. So he's been pushing to derail it. Glenview took the opposite and was trying to get the deal done. And it seems like ISS is now verging on that side of it as well. So then no surprise that Cigna's down. Even if they overpaid, shareholders think it should go through.
Right, you're right. And this is a big vote of confidence. It'll be interesting to see Carl Icahn, not a shrinking violet, see if he comes back and says
no, a stubborn, non-shrinking violet. And of course, Glenview owns Express Scripts, and then Carl Icahn owns Cigna. So you have that battle there.
Nothing like a good old M&A battle to heat up a Friday.
With Carl Icahn, you can't lose.
All right, let's get an update on what's making headlines outside the business world. Emma Chandra is here with First Word News. Emma.
Thanks, Jason. In Turkey, President Erdogan vows that his country will win the economic warfare being waged against it. Erdogan called on those who have saved gold and foreign currency to convert it into the Turkish lira. Many investors were looking for more drastic action from the president. The lira resumed its record fall against the dollar today and is heading for its worst week since 2001. In the US, lawmakers are divided over the Trump administration's plan to create a sixth branch of the military. Vice President Mike Pence and Defense Secretary James Mattis appeared at the Pentagon to announce the creation of the US Space Force. Congress would eventually have to fund it. The service would have to compete for money with other Pentagon priorities. And in Southern California, more than 20,000 people have been ordered to flee a wildfire that's moving dangerously close to their homes. One person has already been charged with setting the fire. In Northern California, fire crews reported more progress in containing what has become the largest wildfire in the state's history. It's destroyed more than 100 homes. Global news, 24 hours a day, on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg. Alex.
Thank you so much, Emma. You got two things leading the market. One is geopolitical risk over in Turkey. The other is the CPI data that came out. So basically, the CPI in July had the biggest annual gain since 2008. Core also coming in pretty solid as well. You had hotel rates, airline fares seeing a big move as apparel costs were a little bit lighter. All of that part of the market story being dominated by a risk-off feel. S&P futures around the lows of the session. The dollar continues to rally. Money flowing into bonds, out of European assets, out of emerging market assets, Jason.
So coming up, what a day.
Oh my gosh, what a week.
What a week. It feels like about 3 weeks ago, but it was just a few days ago that Elon Musk sent out a tweet and said, I'm thinking about taking this company private, $420 a share. It roiled the markets in an entirely different way. We're going to discuss that with an old friend of mine, Stephen Kaplan, University of Chicago Booth School professor. This is Bloomberg.
This is Bloomberg Daybreak. I'm Emma Chandra here in the Hewlett-Packard Enterprise Green Room. Coming up in the next hour on Bloomberg Markets The Open, Jonathan Golub, Credit Suisse's chief U.S. equity strategist. This is Bloomberg.
So up until this morning, it felt like the story of the week was Tesla. Elon Musk coming out earlier this week with a rather cryptic tweet saying that he had committed funding for a $420 a share buyout, a take private of Tesla. This, of course, is the car maker that he controls. He also is a spaceman as well, controls SpaceX. That is privately held. We have been trying to make sense of it, as has Wall Street, over the past couple of days. So let's break it down a little more. Joining us now are Steve Kaplan, old friend of mine from the University of Chicago Booth School, and David Welch, Bloomberg's Detroit bureau chief. So, David, I want to start with you just to bring us up to date on where we stand now and what may happen next with Tesla.
Yeah, so the latest that's happened is the board is going to meet with advisors next week to kind of figure out what they should do next. This is a bit routine. Whenever there's a leveraged buyout plan or an offer to buy a company, the board has to make sure that the interests of shareholders are represented, that whatever price, whatever structure of the deal is really in the best interest of the stockholders of the company and not just management. And in this case, they're in a bit of a precarious position because they have a very charismatic CEO who happens to really hate being the CEO of a public company. He doesn't like short sellers, he doesn't like the scrutiny of the markets, and that's why he wants to go private. They have to make sure that whatever offer comes in, that being the board, is really in the best interest of shareholders. And I can tell you, $420 a share is not going to do it. There are a lot of long holders who think this company's worth $570 or more. So they're going to have to do better than that.
So David mentioned that this is partly routine. But Steve Kaplan, I think you know nothing is routine when it comes to Tesla. You've been following buyouts, you've been following M&A, you've been following corporate governance for a long time. What do you make of this, and what needs to happen next, and what may happen next?
Great questions, and great to see you, or at least talk to you, Jason. This is really unusual. It's not exactly a leveraged buyout. We don't know exactly what it is. So first of all, it's very large. It's $70 billion. It would make it, as a dollar amount, the largest buyout ever. Second of all, what's really, unusual about this is that the company is cash flow negative. Most times when you see a buyout, the company is generating a lot of cash. That allows you to borrow money and buy out the public shareholders. That was the case of Dell a few years ago, is the case of RJR Nabisco, way back in the 80s. Here he's cash flow negative, so where he's going to come up with $50 billion, which is about what he's going to need to do this, because insiders hold somewhere around $20 billion, so he's going to need $50 billion to get this done if it's at 420, which it may or may not be. So I think the big question here, which everybody's asking, is where is the money coming from? It's probably going to have to be, some big equity checks, and we don't know where those are coming from.
Well, I'm glad you mentioned the big equity checks, because some of our reporting this week here at Bloomberg pointed out that SoftBank was one of the companies that had at least preliminary conversations with Elon Musk about a potential go private transaction. Ed Hammond was out in Kansas City earlier this week, and spoke with SoftBank COO Marcelo Claure about whether SoftBank might be interested in this.
We wouldn't know particularly if something ever happened with Elon or not, so we wouldn't comment anyway. But if there's a deal going on, there's a chance that we are going to be informed, or we're going to be part of the conversation.
So, David Welch, tell us what the rest of the car industry is saying about this, and what it may mean for other big automakers.
Well, Tesla's a pariah with the rest of the car companies, because most people, the big established car makers, kind of think Elon Musk has always gotten a free pass. He, misses production targets, which, because their cash flow relies on them getting up to full production, means he inevitably falls short of the guidance he gives, unofficial guidance on financials. So, for example, he says he's going to be cash flow positive in the second half. Well, you got to get production up, and so they look at him as kind of this guy who, because he's making electric cars, just doesn't get the same kind of scrutiny. Other than that, they're all kind of watching to see what happens next with this company. And they don't really, it doesn't really affect them, other than, hey, what's going to happen to our big competitor going forward.
Right. David Welch, thank you so much for joining us from Detroit. Thank you to Steve Kaplan at University of Chicago Booth School. He is a professor there. Alex?
All right, you have the lira now at another record low, past 6.3 per dollar. Here's the why. President Trump tweeting, "I've just authorized a doubling of tariffs on steel and aluminum with respect to Turkey." Lira slides rapidly downwards against a very strong dollar. Aluminum will now be 20%, steel 50%. Our relations with Turkey not good at this time. We'll break down the currency reaction next. This is Bloomberg. Lira dropping to a new record low as President Trump increases tariffs on aluminum and steel. Steel as high as 50%. Joining us now, Vince Signorella, Bloomberg's global macro squawk and former trader. And on the phone, Jane Foley, Rabobank head of FX strategy. Vince, where do we wind up?
With the lira?
Yeah.
It could be 7 by the end of next week. There's so many things going on with Turkey right now. You've got a bond auction on Monday, a 2-year, a 10-year on Tuesday. S&P scheduled to rate them next Friday. I would not be surprised if they go today.
Jane, what do you think?
I think that's quite right. There's just far too much uncertainty for investors. Investors were hoping from Erdogan that there might be some degree of compromise in his speech. But no, there was defiance, there was nationalism, and there was nothing giving investors what they want, which is tighter fiscal policy, structural reform, and of course, tighter monetary policy too.
So, Vince, I got to ask you, the ante continues to be upped here. We, to no one's surprise, just got a tweet from President Trump upping the tariffs on Turkish steel. What happens from a broader perspective beyond Turkey? Go macro for us.
Well, you're going to see something of a contagion. You have European banks heavily invested, or lent, I should say. Turkey's borrowed, as many other emerging market countries have, in U.S. dollars to fund their debt. As their currencies weaken, that debt gets more expensive. The repayments are more expensive. That weakens the entire structure. How far it spreads, we're not talking probably the Asian contagion of the late 90s or the Russian crisis of that size. But it could spread deep enough within Europe to affect other emerging market currencies.
So, Jane, that brings us to euro dollar, really taking it on the chin today. How much of that do you feel like is sort of low liquidity, technical levels versus some real fundamental contagion risk?
Well, I think there's a bit of both. I mean, certainly liquidity has been low today. It's August, and that has been a contributing factor. Euro-dollar has been in a range for a while, and suddenly we had a breakout, and this was just the incentive to break lower. But there has been news. There was the news, the reports this morning of those European banks potentially being exposed. Contagion. Today, contagion's been a watchword. Yesterday, it was Turkey was described in the terms of idiosyncratic. So there has been a swing. Investors are concerned about contagion. It has swung into European stocks, and therefore it's affected the euro. So what we don't know exactly is to what degree are European firms or even US firms or European banks exposed to Turkey, and this is the sort of evidence that the market will be trying to dig up and analyze over the next few weeks.
Hey, Jane, what's the downside for euro dollar?
Well, you know, our view is that it's going to 112. Now, I didn't think it was going to go to below the 115 quite as quick as it has done. It could hang around here, but we've still got interest rate differentials certainly still favouring the dollar. And it's got to be said that the outlook for risk is poor, and that is bad for emerging markets. And it seems that emerging market flows or outflows are still headed for the US dollar, and I don't think that's going to stop anytime soon.
So, Vince, we have all this unexpected news coming out, but then some fairly expected news in CPI this morning. How do you look at the U.S. in the context of this world that seems to be, if not aflame, at least unsettled?
Well, it's smoldering, maybe not aflame just yet. I think when you see CPI data like that and you see inflation data like that for the U.S., it speaks to, again, that positive yield differential, and it makes dollar assets continually more attractive, especially with this potential contagion situation. I mean, Jane is perfectly right. We were talking about this yesterday. Turkey was idiosyncratic. This morning we come in, and now it's a contagion issue. And it's definitely at the forefront, and it's going to stay there for some time, I think.
Guys, thank you so much. Really appreciate it. Bloomberg's Vince Signorella and Jane Foley of Rabobank. So it is a risk-off day. You have contagion from Turkey continuing to spread. Jason, you want to be buying the dollar. You want to be buying bonds and selling all risky assets. That seems to be the trade of the morning.
It absolutely does. You know, we went to bed last night thinking, oh, we're going to talk about Tesla. We're going to have a summer Friday. And now we have Erdogan.
In our editorial meeting yesterday, I was like, maybe we should hit EM tomorrow.
Yeah, maybe.
I think we should have. All right, that wraps it up for Bloomberg Daybreak Americas. Coming up on Bloomberg Markets, The Open, you got Jeff Dennis, UBS Head of Global Emerging Markets Equity Strategy. This is Bloomberg.